So, good morning. How many of you own a house in Mumbai? Raise your hands. Okay, about 40%. Vimal ji, आपके लिए और भी market है. So many people don't have. But Mumbai is also a very expensive market, right? Whenever people come to Mumbai and say, मैंने flat खरीदा, मैं पूछता हूँ यार flat कैसे खरीदा मुंबई में? इतना पैसा तुम्हारे पास कहाँ से आया? You know. So let's start this discussion. Mumbai has been in the news a lot in recent times for real estate. February apparently was a 12-year high in registrations, right? It's absolutely incredible. Vyomesh ji, how is business? आप तो बहुत खुश होंगे. And what has changed?
Business in last 3 years have really, after COVID, has turned a complete positive turn. And there are buyers in every segment. People now understand that the real estate is the real money, the real investment, and one need to have a good house. After COVID, the need for good house, good environment, good surrounding has been quite ingrained in everybody's mind, and that is boosting the business. Of course, it's supported by great growth in the economy of country, growing at an average rate of around 8% per annum. And with that kind of growth, the real estate is bound to grow.
Terrific. So, Pankaj, and Prashant, both of you, we were discussing off stage about how real wages are really not growing. So how is it that people are buying more and more premium property? Especially Mumbai, I think in February it was ranked in the top 8 of the world's, top luxury kind of real estate markets. I think 8th position or something, which is like really, really big, right? Paisa kahan se aa raha hai?
I think Mumbai has the maximum number of riches and high net worth people. So
oh yeah, we know that.
There is a money. And plus, if you see the rallies recently, what has happened is that it's led by the upgradation demands, because during the COVID time, a lot of people realized that they need bigger houses and more convenient houses and all this thing. So they're selling their old houses and buying a new houses, taking incremental loan, and that's what is building. And apart from that, they made good money because the stock market has really done good in the recent times. So the good money in their hands, the requirements for the space, and then the most productive market where they are now sensing that since after a stagnancy of almost 6 years, the prices became productive and they started moving forward. So there is a confidence, there is a RERA. So they know that the builder is not going to default the way it has happened in past. So there's a consumer confidence, there's a productive price, and there is a demand which is led by the upgradation, which is leading to the luxury market sales.
Yeah, okay. We'll take that for now, and we'll go a little deeper as we go on. Prashant, what's your view on this whole premium thing?
See, I think, we'll have to take a step back before RERA was there to kind of set the context. We are still a housing deficit country. If you talk about only top tier 1 cities, close to, 2 crores of housing deficit is there, and that's the reason we see urban slums. Yet we had a problem of unsold inventory stuck project. So the real game changer has been RERA. And post RERA, I think it is a change in the, the ground, level playing ground. There has been a huge shift in the mindset of the buyers, the developers, the financial institutions. So a lot of cleaning has happened. Now what we see is right now, post-RERA, projects are getting completed on time, deliveries are happening on time, and then, the developers are also kind of reaching out to the customer with right product. And then initially, after post-COVID, there was a lot of pent-up demand that we saw in the market, and people realized the importance of physical asset. It's not that they didn't understand the importance of housing, but they had a lot of apprehension. Those apprehensions have been now addressed more or less by introduction of RERA and all the stakeholders kind of resorting to self-discipline. Now the second part is, a lot of people talk about whether we are running too ahead of our pricing. I would say again, we need to take a step back. You know, post this run-up we saw, there was close to a decade of price stagnation that happened, right? So if we take that amount of you know, stagnation as a catch-up factor happening, I think the price rise has kind of, you know, been more or less moderate. Yes, but I think we are.
You're saying prices stagnated for a decade?
Before, you know, before we saw this run-up post 2000.
Okay. Did that really? I didn't notice that.
It did not go up.
It kept on rising.
It was kind of, it did not go down, but it remained where it was. So it's more of a run-up that has, catch-up that has happened. And plus, yes, the markets are doing well. People are kind of also factoring in the increase in input cost and everything. But I think, again, we are at a crossroad. We kind of, you know, I kind of understand the apprehension that are we running ahead of our fundamentals? I don't think so. Because if you look at the infrastructure-led development, which is kind of is the opening of a lot of land parcel, take an example of Mumbai, right? The highest capital value we have, but yet this market has kind of performed well. Mumbai accounts for 45% of the entire real estate sold across top 7 cities in terms of value. And the reasons are very clear. It's a case study. RERA was the strongest over here, is still the strongest over here in terms of implementation. Look at the way the infrastructure is opening up new land parcel, kind of upgrading the existing micro market. So in my opinion, I think this is more of a market that has expanded, supported by well fundamental, but yes, we need to be cautious that we don't run ahead of our fundamentals. That's what
yes,
I think.
cautious.
I would add that why the market is really doing great. World over, when the monies are pumped in infrastructure, there is a lag of 5 to 7 years before the economy starts booming and the income starts rising. Okay. The monies which have been gone into infrastructure from 2014 onwards have been in terms of lakhs of crores. And that's got little break because of, I mean, it should have started, if the COVID would not have been there, the impact of the multiplier effect of the money pumped in infrastructure would have been felt in 2019-20 itself. But because of the COVID break, it was started coming into economy from 2021 onwards. Secondly, the quality of the product which is now being delivered in MMR, especially Mumbai, by every developer, most of the developer, the facilities, the amenities, the finished product. Now this is creating a huge demand in the mind of a person who has been living in an old flat, that I must move into this complex, I must move into this building, I must really go for a larger flat in this building. So all this is completely building up the demand. The income level has risen. Earlier there was only 1 earning member and 3 dependent in a family. Today there are minimum 2 earning members. So when you compare affordability with 1 person's income, yes, it's not there. But when you compare with 2 or 3 people earning in a family or a household, and household is bought by a family, it is never bought by an individual. So when you put together, the affordability index has gone up drastically for a 1 house purchase. And that is the reason why the demand in MMR is growing greatly.
Interesting. It's a fair point, you know, that the family income is growing and so the affordability index goes up. There's also the fact, right, Pankaj, that urbanization in India is increasing, not necessarily only in MMR, but everywhere, right? You were talking about Bangalore. And for your information, guys, you know, Mr. Shah was saying just off the stage when we were having a chat, people actually queued up at 4 a.m. in one of the new projects that was being launched to book flats in Goregaon, which is incredible, the kind of demand. But considering that more and more people are getting into cities and more people are upgrading, what kind of demand curve are you looking at? You know, and the finance minister is going to talk about in the evening about Viksit Bharat by 2047, which is a $30 trillion economy.
Yeah. So if you see the urbanizations as of 2011 census was approximately 32%. And by 2032, it is going to be around 49% in India. 49% in India. So there is an incremental increase in the requirement for housing is close to 6.4 million homes. Okay, 64 million homes, not 6.4 crore homes. And then we still have a housing shortage of close to 1 to 2 crore homes. So there is a housing shortage which is there, and there's a increase in the requirement which is going to be because of the increase in the populations. We have a household size reducing. So because of that, also many houses will be needed rather than a lot of people living in the same houses and things like it. So urbanizations and increase in the demand clearly indicates there is a requirement which has to be fulfilled in the real estate sector. And it is also now diffusing. Earlier, although in the recent times I see the post-COVID, the phenomenon has been more of the top 8 cities where the majority of the sales taking place. Tier 2 cities started catching up in the last 4 to 5 quarters. I'm seeing that. And I see the way the economic diffusions which is taking place, the way the infrastructure growth which has happened in the suburban areas of the metro cities as well as is the smaller cities, when the economy and jobs and the way the COVID has changed the economic playouts, like, the migration is not something which is like everyone is coming to Mumbai for work. Now the job is started moving to the places where they belong to. So the demand is moving into the smaller cities. And all these things is adding up. So it's the aggregated volumes earlier used to be confined to 8 or 9 cities. Today it is growing to around 100 odd districts across India. And that's what is really talking about the housing stories, why the credit growth in the housing has been increasing, not just in the luxury and ultra luxury and mid segment, but in the affordable and other segment also. And that's kind of an outlook which also suggests that it's not a phenomenon which is a recent phenomenon, and it is going to really fade down once the prices will grow and many other things will take place.
Got that. But Prashant, tell us, you were talking about a 5% CAGR of real estate growth, price growth, right, over the past decade or so. What is your expectation of the CAGR in the next 10 years, considering the kind of demand that we are seeing?
See, before I answer that question, let us understand, the pricing also depends on demand and supply dynamics. We also need to keep one thing in mind, that the amount of land parcel that is being unlocked by infrastructure that is coming up will also lead to a spurt in a lot of supply that is coming, and that's what we are seeing. This is the first hypothesis that I have. And second is, if you look at the kind of connectivity through rail, road and airports, smaller airports through Udan scheme, is also opening up a lot of tier 2 cities. So in a nutshell, the supply is always going to cap the, the pricing that would have. So in my opinion, the price rise that I'm expecting would be in the range of inflation plus 2 or 3%. And we also need to understand that why do I keep on saying that India is an underhoused country, and it's kind of more of a end user driven demand that is going to power this sector. Let us take an example of insurance. Insurance primarily is a risk coverage product, but in India we had this tendency of selling it as an investment product. Same is happening with your housing stock. Primarily, if you look at the current situation of our country, it has to be an end user product right now. We had made this mistake in the past of pushing this product as an investment product, which led to a lot of problem. I think that correction has taken in place, and that's why you see huge amount of supply happening. The buyers are kind of more evolved. They have that, the kind of value that they're going to get and the pricing that they're expecting. So there are a lot of counterbalance, and that's the reason I'm telling that the pricing that you would see would be more of a market determined, in my opinion, inflation plus couple of %
right.
That would take into account.
So you are saying that you are expecting a 2% markup over the inflation rate for the prices to be going up. How much? That would be about what? About 8, 9, 10%, right? How many of us get 10% raise every year? Nahi milta hai na? So it's going to be tough, but people are still buying, right? And like I was saying, in the room when we were talking, that there is barely anything available for less than 1.5 to 2 crores in today's market, right? So, Mr. Shah, how do you, what is the definition of affordable now? When you're saying that affordability index has gone up because the incomes of households have gone up compared to incomes of individuals, right? What is now an affordable housing?
Affordable housing, according to me, is a definition which is 100% dependent upon the location. If you're talking of Nepean Sea Road,
What about Mumbai?
so in Mumbai, I'm talking of Mumbai only. And every location has a different affordability. If you're talking of Nepean Sea Road, the affordable housing is 25 crore and above. Okay. If you're talking of Borivali, the affordable housing is 2.5 crore or 2 crores. If you're talking of Virar, the affordable housing is 80 lakhs to 1 crore. So it's affordable housing is for the government, yes. As far as the policies are concerned, it has to be for the masses. So from that point of view, the affordable housing definition would be 50 lakhs or 1 crore or whatever it is, and which is what they determine for priority housing. But as far as a developer is concerned, for me, affordable housing, for me, is a simple definition, which keeps my sales on. Simple. So I don't determine the price based on what surrounding is, but what sells in my project. And if my project keeps selling at the required pace, that is an affordable price at that location.
So what are you seeing in Mumbai now? You know, compared to earlier, before COVID, there was a lot of demand that came in during the, because of the COVID situation that happened. What are you seeing in Mumbai now? Are developers in general sticking to the principle that you are saying that, you know, whatever sells in whichever market, we will price it accordingly. And of course, your project costs will also have to then be borne. But are you seeing the industry generally sticking to that principle, or are people overpricing and still managing to get their flat sold?
I would put it like this, that every developer or every person who is in this business will need a liquidity to go on coming. And what has happened between 2008 to 2017 or 15, where a lot of developers went into delinquencies, went into project delays because of not selling and holding on to the price. And those experiences are well etched in the mind of not only developers, but also in the mind of financial institutions. And considering that, I do not see that people will be able to hold the prices if there is no enough sales volume. The volume is the key, and affordability, where the volume is achieved, is what is affordable. And I don't see most of the financial institution now will permit holding on to the price at the cost of volume.
Okay, fair point. Pankaj, let's come to, you know, the entry of corporates into the market, especially in Mumbai, right? There are specialized, there are corporates like Raymond and all who have got into the MMR market who are not present anywhere else in the country. And there are Tatas, Mahindras, practically every big shot Godrej that you can think of. Godrej is there in other places also. What difference has it made? First of all, why are they here? And has it made any difference to traditional people like Mr. Shah and others?
You know, there have been tendencies for the corporates to enter into the market. So if you look at way back in 2007, 2008, when the prices were increasing and the margins were very good, that really led to various corporate to jump into the real estate market, because they were saying that instead of making 12%, 15% return on investments, real estate can offer you 50% and 30% and 40% or 100%. And that's what led many corporate to jump into this. And they learned over a period of time, because then we had a prolonged stagnancy, and then the margin got eroded, and they learned the message. But having said that, there is also a gap in the market which was available. So there was an organized development and developers and unorganized developers. And then there was a requirement of the corporate governance and many other things, which the corporate really brought in. And there was a trust deficit. So likes of major corporates, they come with a brand name and all those things. and they were able to garner the people's polarizations to themselves, and the demand started going to their end. Having said that, you know, I am also telling you that it's a local market subject. Corporate comes up and they bring in the supply, and they still have to compete with the local market and local developer, because 50% or 60% of the people who buy in a specific location belong to that particular location. There is a micro market competition which is also there. So the product, the quality of the product, the delivery of the product, so they can deliver in time, but are they meeting the aspirations? Are they providing the similar kind of a quality of the good? Having said that, the way I analyze in the recent times, the deliveries done by some of the major corporates haven't really been living up to the brand assurance they are bringing. Over a period of time, they may probably improve on those particular sides. But they came in, they brought governance, they bring in the trust which the consumer need. Having said that, in terms of maintaining the product quality which live up to the brand and the brand quality, I think they are finding it difficult to compete with the local developers.
Is that correct, Mr. Shah? You are competing with them directly.
According to me, yeah, they are finding difficult to maintain the standards considering the volumes they are taking up. They are taking up thinking that this is like any other industry which they set up. And if you take an example of 2003 to 2008, a lot of corporates entered the real estate sector. By 2017, practically nobody was present except one or two. Now again in 2023, they are entering the sector because they feel that there is a volume, there is a turnover, there is a margin. So corporates are very good in entering, very good at exiting also. Okay, I mean, and as a established developer like Hubtown or whatever we are there since 30 years. So we have a lot of reputation to protect, not for past, but for future also. We are going to be in this for over a period of next minimum 50 years. Next generation is also in there. All our families are entrenched into it. So for us, we have to ensure that benchmarks which we set up are met. Corporates do maintain, I'm not saying that, but they are finding it difficult when it comes to real estate sector, because it's not a normal product which you sell every day. It's a product which you sell to a person once in a lifetime. You sell a car, you sell a soap, you sell anything, jewelry. It is a person who is going to come and buy again and again as a product. But when it comes to house, he's going to buy once or twice in a lifetime. So he's going to really, you have to meet his expectation thoroughly, and that in a regular developer like Hubtown is entrenched into our systems. And that they will also adopt, I'm saying, if they want to continue long term, if they are not planning exit when the margins go down. I mean, like they did it in past. So if they really continue like that, then they will pick up, but we definitely have an advantage over them in the near terms.
At least now you have an advantage, and you will have to keep working to, just like a bowler who has to keep finding new ways to fool the batsman, you also have to find new ways to compete with them, right?
Late in swingers.
Late swingers, yes. Prashant, specific to the Mumbai metropolitan region market, what are the risks that you see in this whole growth? You know, we are all talking great things, and you are saying that people make mistakes when things go very well, right? Which is so very true. And in every field, right? It's not only about real estate. You know, when we are doing well, we think that, oh, nothing can ever go wrong. And you sort of spread yourself out too thin. This is one of the risks, right? From the MMR perspective, what do you see as the key risks or challenges in the near term?
See, I would say that I think Mumbai has been a very disciplined market even before RERA came in. I think top 5 listed developers are based out of here. The only risk that I have been pointing out is that we should not run ahead of our fundamentals in terms of pricing. And also in this market, when the buyer has this tendency of fear of missing out, these subvention schemes, especially the builder-led subvention scheme, they kind of encourage such buyers to enter the market for whom the long-term payment would be a bit difficult. So I think self-discipline should be kind of be focused at the highest from the developer's point of view.
Self-discipline in what
in terms
area?
Of,
which areas?
I think in all the areas, to be very honest, because if you look at all the micro markets, especially the peripheral areas, they're kind of booming like anything, especially after all this MTHNL and everything connectivity coming in. And that applies to, the markets where you have seen a huge upgrade in terms of people who were in a position to afford budgeted homes are kind of upgrading now. So you don't upgrade them with this subvention scheme to such product which becomes unviable for them. So the southern part of the town, I think, is more immune to the price fluctuation, but it is the mid segment which needs to be nurtured and kind of, should not be kind of enticed into buying a product which is beyond their capability to pay. And that's where the pricing as well as the way you pitch the product, push the product also, plays an important role. So that's the area of concern. Otherwise, I think the long-term fundamentals are quite good. It's not only that the developers needs to exert caution, I think the buyers have also evolved. So I think they kind of also use their lot of judgment when they buy a product. So I think we are in a stable state market. So I think that's where a sweet spot we are in right now.
Okay. Pankaj, your view on risks and challenges in MMR?
There are two risks in the real estate. One is price correction risk, another is execution risk.
Sorry? Exclusion.
Execution risk.
Okay. Bring your mic a little closer.
Execution of the real estate. Yeah, execution of real estate projects, that the builder will deliver in time or not. What happened in past also. Builder took a commitment but could not deliver in time, and that's what. And I see, we don't see a price correction risk in the market because we already have seen a stagnancy and time corrections in the last 6 years or 7 years. And this is after a prolonged stagnancy, the prices started inching upward. Last 10 years, CAGR growth in the prices across India has been 5%. So if you look at the prices haven't really gone beyond the inflation growth in the real estate sectors.
Which means prices are not going to come down.
So I'm saying so far it has not, but it has started inching forward. Like, you can't remain inefficient always. There is a fundamental which starts catching up, and that's why the people's income during the period, my own sense is at least 7-8% annual increase in the income of the consumer would have happened in the last 10 years and something. And that's why the affordability and price parity which are there, and that's where we are seeing that the price correction risk is not there. Execution risk is a major concern in the sense of, and which I am also sensing. A lot of places I see the land cost has started jumping again, so, which was a case from 2005 till 2011-12.
That is probably one of the side effects of more infra coming in everywhere.
More infra and more money flowing in that. It's not just an infra. Infra, frankly speaking, reduces the prices, bring in the affordability.
Not really. You look at Jewar Airport being developed.
No, I'm saying that because it brings the land efficiencies. So why Mumbai is so premium and why it is so, it was very highly priced. The reason being it was a landlocked and where huge population used to live. But after the Bandra-Worli Sea Link, you see the Worli prices haven't really appreciated while the Bandra did. And after the Trans Harbour, you will see the pressure onto the Mumbai prices may be higher. And while the Navi Mumbai, which is opening up, may probably see a growth and things like it because the infrastructure is bringing the land efficiencies in this aspect. But having said that, the higher FSI has increased the land prices. And a lot of developers started outbidding the lands, and which was a case earlier also. And I've seen there's a bell curve. it's not that the prices continue to be going up and then the margins of the developer and profitability continues to be increasing, because with that there's a time moment comes is, so higher FSIs of 7 or 8 takes longer time for constructions, longer time to sell, so the finance cost increases. And because of that, and then there are, in the real estate, there are a lot of uncertainties, even though now a lot of improvement has happened in the sense of ease of doing business and then approvals and many other things. But in the last 2.5 years, I have seen that any project which was, which is for a timeline of say 4 years or something, generally it takes extension of 1 year or 2 years. In past, it has happened more than 2 years and 3 years. And in that case, it eats up your margins, and that's where the default takes place. So if the land cost grows up, it will increase your finance cost, it will increase your construction cost, it will probably reduce your margin. So the cost structure, the embeddedness of the cost has to be looked into it, and which is happening. So I'm saying that whether Hyderabad is showing a record price पे नीलामी हो रही है लैंड की, सिटको की हो रही है, मुंबई में extensive FSI हो गई. So a couple of redevelopment projects are telling that we have to build in 8 FSI in the 25% of the land parcels. And I know that when you have to go so high, and when you have to play with this particular game, then you have to be more careful in the sense, because now after RERA, you can't really prolong your projects. There is a deadline in which you have to deliver the project.
Correct.
So the cash flows has to really get managed very well.
Thank you. We are out of time. It's a fascinating discussion which we could have gone on for another hour easily. Is there any question from the audience? We can take one or two. Neil, wow, okay. So Neil is our editor of Personal Finance.
Hi. So I'm just keen to know about the panel's views on fractional real estate, and more particularly on the recent SEBI circular on small and medium REITs, where SEBI has brought down the minimum size of a REIT from 500 crores to 50 crores, where you can now have a single building that becomes a REIT essentially. And also it allows for both residential and commercial REITs. So what impact can that have?
Okay. Who wants to take that? Mr. Shah?
This is one of the most positive step towards really building the right kind of market, investment from investment point of view, or investment class, asset class point of view, which I think this is one of the, because what used to happen is that the consumer or the investor who could not afford real estate to be as a class of in its portfolio used to stretch themselves to have that in for the purpose of wanting to get the inflationary or price rise advantage. And that would go beyond their means, and that brought problems for everybody in the business. This is one of the best way in which you can build your portfolio of investment with an asset class, which is real estate, which was very, very difficult to own as an asset class within your portfolio. So it brings complete diversification, which was essential. You can't own only shares, you can't own only gold, you can't own only real estate. So this is one of the best way that RBI has really come out with right policy at right time when the country is poised for reaching trillions of dollars of economy. I see as a huge boost to the real estate arising out of this.
Okay, we'll take one more question if there is one. There's a gentleman there at the back. Can we have the mic for him? Short question, please.
Sure. I'm Rajiv Soni. See, young generation, as they become younger, they don't want to buy the house. So any possibility of real estate becoming a service?
Real estate as a service. I think it's already partly there, isn't it, Prashant?
I think, a lot of models are being worked. For example, co-living, shared living. You would see, a certain asset class emerging. that, in a way brings in, depth to the market. Now, for example, the biggest problem of an investor to invest in residential is lower rental yields. So the assets like, co-living, shared living is aimed at enhancing those yields. So that over a long period of time would bring some kind of attractiveness to the asset class, in my opinion. So that is already, in a very nascent stage, but yes, you will see a lot of work happening in that space.
Okay, thank you all very much. Sorry, there's no more time. You can ask them offline. Thank you.
Thank you.